The longest U.S. government shutdown in history just ended. But the markets aren't celebrating. In fact, what happened next shocked everybody. Small caps tanked, rate cut odds collapsed, Europe rallied, then panicked, Asia completely split. If you think the political chaos was the story, you're missing the real battle that's pulling the market apart right now. And if you're wondering what's actually happening behind the scenes, the data fog, the volatility spike, and the global ripple effects, you're in the right place. If you're new to finance, the explainer starts right after this short. Stay tuned. Otherwise, jump straight to the podcast link in the description for deeper insights and the full global breakdown. Don't forget to like, share, and subscribe, because next week's story could flip the market all over again.
All right, welcome back. So this week, we saw a huge political mess finally get sorted out in the United States. And you'd think that would mean a big party for the markets, right? Well, not exactly. What we got was something a whole lot messier. It was a classic case of relief versus reality. So let's get into it. And that's really the billion-dollar question, isn't it? The longest government shutdown in history is finally over. So why does it feel like everyone is still holding their breath? Answering that one question tells you basically everything you need to know about where the global economy stands right now. You see, it all comes down to this massive tug-of-war. On one end of the rope, you've got this big wave of relief. The government's open, the stalemate is over. But pulling just as hard in the other direction is this giant wall of worry about, well, everything else. Interest rates, inflation, a possible slowdown. So let's break down this tug-of-war and see which side came out on top.
And let's be clear, this was a huge deal. 43 days, that's a record. All that uncertainty was a massive weight on the market. So you'd think that with that weight finally lifted, things would take off, right?
Okay, so let's start in the US, because that's really ground zero for this whole thing. The reaction there was just incredibly divided, and it really sets the scene for everything else we saw happening around the world.
Okay, take a look at these numbers. What's wild is just how meh they are. The S&P 500, basically flat. The Dow, up just a little. But then you look at the NASDAQ, and especially the Russell 2000. That's your small cap stocks, and they were actually down. The small caps took a real beating. This does not look like a market breathing a massive sigh of relief. And this slide right here, it just lays it all out perfectly. On the upside, you had two big things. The shutdown ending, of course, and, believe it or not, a really strong Q3 earnings season. Profits were up over 13%. But the forces pulling things down were just as powerful. That initial hype around AI stocks has started to fade a bit. Then you had the Fed sounding pretty hawkish, still focused on fighting inflation. And all of this was happening inside what we're calling an economic data fog. And that hawkish talk from the Fed, whoa, it had an immediate and pretty dramatic impact. Just look at this. A week ago, traders were betting there was a 70% chance of a rate cut in December. After those comments from Fed officials, that probability just plummeted down to 46%. That is a massive swing in just a few days, and it really sucked the air out of the room. So what is this data fog we're talking about? Well, think about it like this. Because of the shutdown, all these super important economic reports, like the jobs numbers for September, just never came out. So we're basically flying blind. We don't have a clear picture of how healthy the economy actually is, and that uncertainty makes investors really, really nervous. All right, so that's the story in the States. But this push and pull wasn't just an American thing. It rippled right across the globe, mixing with all sorts of local issues along the way. So, let's take a quick trip around the world, shall we?
First stop, Europe. Over there, you could almost hear the sigh of relief from the US situation a little louder. It definitely sparked a bit of a rally. But that optimism ran smack into a much shakier economic reality on the ground.
And when you peek under the hood, it's a real mixed bag. Yeah, the main European index was up almost 1.8%. Which is nice. But industrial production was super weak. And in Germany, the economic engine of the continent, investor morale is still falling. The only reason the market was up was because of some surprising strength out of France and Italy.
Now let's hop over the channel to the UK, where, honestly, the story gets a lot gluier. The market basically went nowhere. It just treaded water as a whole bunch of pretty weak economic news started rolling in. I mean, look at this list of headwinds. It was just one thing after another. Unemployment jumped to its highest point since 2021, wage growth is slowing down, GDP for the third quarter barely grew at all, and then, to top it all off, a cyber attack hammered car production. It's no surprise investors are now betting the Bank of England is going to have to cut rates, and soon.
Okay, let's head east now to Asia, starting with Japan, where things were actually kind of different. The market there managed to climb a bit higher, but not because the economy was booming. It was really all about a weaker currency and hopes for more government spending. So what happened was the new prime minister started talking about more government spending, and that pushed the yen weaker. A weaker yen is usually good news for Japan's big exporters, so stocks like that. It also meant the market now thinks the Bank of Japan will wait until next year to raise rates. We even saw a little glimmer of good news with manufacturing sentiment hitting a 2-year high. So, a rare pocket of optimism.
And that little bit of optimism in Japan? Well, it's a world away from what's happening in China. The data coming out of there for October suggests the economic recovery has hit another wall. The start to the fourth quarter was not good.
Yeah, the numbers here are pretty concerning. Industrial production, retail sales, they both missed the mark. Investment had its worst performance on record. And the property crisis just keeps grinding on, with home prices still falling. Honestly, the only thing holding the market up right now is the hope that Beijing is going to step in with another big stimulus package. Okay, so after a week like that, the big question is, where do we go from here? Well, the good news, or maybe it's bad news, we'll see, is that the data fog is finally about to clear. We're about to get some real answers.
And here's the calendar of events you're going to want to watch. We get some numbers on U.S. industry, key inflation reports from the U.K. and Japan, but the big one, the one everyone is waiting for, is that delayed U.S. jobs report on Thursday. We'll also get our first look at business activity in Europe for the fourth quarter with those PMI numbers. It's going to be a busy week.
And all that data boils down to these 5 huge questions that are hanging over the market. Is the U.S. jobs report going to be so strong that it completely kills any hope for a rate cut? Will UK inflation come in hot and force the Bank of England to change its tune? Does Japan's economy look strong enough to handle a rate hike? These are the questions that are going to be driving everything in the days ahead.
You know, there's a line from the analysis that I think just nails the mood right now. Expect volatility ahead as clarity slowly returns. And that's exactly it. Just because we're getting more data doesn't mean things will calm down. In fact, it probably means the opposite. More information means more for the market to react to.
And that really leaves us with the big final question. For weeks, everyone has been waiting for this data fog to lift, to get a clearer picture of the economy. But when that picture finally comes into focus, are investors going to like what they see? Or are they just going to find a whole bunch of new reasons to be cautious? We are about to find out. Thanks for joining me.
If you found this breakdown useful, hit like and share it. It helps more people discover MacroNav. And if you want more clear, no-nonsense explainers on global macro and finance, make sure you're subscribed. Stay ahead, stay informed.